Good day, Warriors. How's everyone doing? Hello, Kevin, Didier, Paul. Hope everyone's having a decent week. Remember, we have the NFP tomorrow. So as far as adding new long positions or short positions, any positions in front of the NFP, you want to be out within 24 hours and 30 minutes before the number. Anyway, that's the way I normally look at things. Metals are on the move. Gold didn't quite get up to the recent high. I thought we might have a failing rally in gold. We're almost at new highs. It's going to be kind of interesting to see what gold does at new highs. Actually, silver's a little further away. I think we're a little over 61.8 back from this negative candle. If we didn't have NFP, I'd be tempted to try a scalp on the short side here. Okay, Paul, congratulations. So we also have dollar weakness, which is supporting metals. Was this the low in the end of this correction of the rising wedge? There are still a lot of dollar bears that would say yes. I'm going to see how we finish on the week. Was a nice short from here and from the wedge. The wedge is still in play in my view. So we'll see what kind of rally we get. Okay, yeah. So again, yeah, it could still be working on a right shoulder. I thought this was the beginning of it. I think you could, buy breaks. You know where you're wrong. Okay. You should have been able to take profit. Let me ask you something, Arena. On your short euro trade, at any time, were you up 40, 50 pips? Okay. And did you take partial profits? Hi, Alexander. Did you take partial profits? But you had to take more. I don't understand that. Okay. Anyway, if you took partial profits, you should have a winning trade. And if for those that didn't, how many times you have to get hit in the head with a ball-peen hammer to know it hurts? Okay, so learn to take partial profits, and you wouldn't worry about a 50 pip pop. You might be thinking about it if you lightened up enough, maybe putting out more. I don't like to short the euro when it's outperforming cable. Okay, so to me, this is not the day to short it. I'd prefer shorts in euro if, say, for example, euro was up 20 and cable was up 50. That's not happening. Okay. So perhaps if the dollar is not going to completely abort, I am getting some signs in Canada. As you could see, we're not confirming this low, right? See that on the 4-hour and on the 2, and probably even on the 15-minute. Yeah, looks like maybe one more low, 1, 2, 3. So this kind of ties in with this was a nice forecast yesterday. I was talking about up here. I was talking about how well crude had the couple of the markets that held on during risk off, and one was crude. Thought there could be a short here. I still think you could short it wrong over today's highs, and when you look at it longer term, it didn't take out this high. It's probably 78 or 88.6 back, but it did not take out that high. So I think that crude is set up for some lower numbers. And if the S&Ps and NASDAQ are going to recover, it's a pretty good day. Okay, might go to 55 first, and S&Ps sideways. A good crypto broker. Well, do you want ForexAnalytix free on top of it? Pepperstone has a nice platform. So check it out. Go to our website, Paul, and you could actually get, if you do a certain amount of trading. They don't? Huh. Okay.
Yeah, a lot of FX brokers don't offer cryptos. And I think it's more of, especially those brokers that have a little tighter regulation, like a regulation environment. You deal with like, and just so you guys know, I don't know if I've ever even told you this, Dale. I got my Australian securities license back in 2009, maybe even before that.
Wow.
Yeah, when the Wise Trade Group, we had an office in Hong Kong for 4 years, maybe, and so I was traveling back and forth between the U.S. and Hong Kong. I'd spend like 2-3 weeks there every like 8 to 12 months or whatever. And then at one point we wanted to expand into Australia and also Singapore. So I went to Singapore, but before I went to Australia, I had to get a securities license. I know their regulatory environment is really, really strict. It's kind of like US based,
Yes.
so yeah, so I know that a lot of the brokers that really kind of follow the regulatory environments and really pay attention and are abide by the rules, which Pepperstone's one of those that I've dealt with a lot of brokers over the years. Pepperstone's a very straight-laced broker, which is good if you use them. They're that type of broker that's like, okay, well, they're following all the rules. They're trying to abide by everything they need to. You deal with some brokers and they'll find the gray areas and they'll just do whatever they want that they think is going to make more money. You know what I mean?
Yeah.
Pepperstone isn't one of those organizations, which I really appreciate about them, especially when we do business with them. But yeah, if you're looking for an FX broker that offers cryptos, Pepperstone's not there right now. But I know, like, for example, I was talking to, actually just last night, I was talking to Chris Weston from Pepperstone Securities. He called me when he got off the train and we were talking. It's so funny, when they're 12 hours away from, or difference than where we're at. He's getting off the train. I'm trying to I'm trying to finish up my day, and anyway, he called me and he's like, man, this Ethereum just continues to run higher. And he's like, and Bitcoin was struggling. And this is, no, I'm sorry. It wasn't last night. It was the night before last. And he's like, man, that's been my best trade is, shorting Bitcoin and long Ethereum for the last 2 weeks. Now, I didn't ask him who he trades through, his crypto trades, but I'm going to ask him. I'll ask him. So anyway, how are you doing, Dale?
Pretty good, buddy.
What's
Just,
what's
now,
happening over there?
kind of, I don't want to screw up my week. Had a decent week. I don't want to screw it up and have to, be in positions in front of the NFP. I kind of think that the NFP is going to be a little bit more important than it has been recently. How
It's going
about
to be
you?
really important, I think.
Yeah.
Yeah.
Especially with Yellen's flip flop, that, when she talked about rates and then had to go back out and,
Yeah.
deny it. Actually, Charlie wrote an article about it. So we have some great things to talk about tomorrow with Charlie. And today, I really enjoy our guest we have today. I know you know her, Raggy Horner, is going to be with us today, and she's a veteran, and I think she has
You
some
know, I
kind of
know of
relationship
her.
with Forest
I've
Park.
never met her. I've never really talked to her. I know she's been
Okay.
around the block a long time. So,
Yeah, and
but
she kind of, in some way, work with the guys from Forest Park in Florida.
I don't
She's
know.
down
Oh,
there.
they work with a lot of people.
Oh, okay. All right. Well,
Matter of
she's in
fact,
Florida, so
because of them, I'm not going to be here tomorrow. Just so you guys know, I'm doing this. I'm doing this like trader battle, and I haven't talked a lot about it because it's a new venue. It's myself and another trader. It's Chris Pulliver from Market Traders Institute. We're gonna like be head to head with during non-farm payroll. So I won't be here tomorrow. I'm gonna be kind of in this live environment. And like I said, I haven't talked a lot about it because it's a new like venue, and I'm not sure. It should be pretty cool. I'm not really. It's it's new. Let's just put it that way. So if it works out really well, it won't be the first time, and I'm sure I'll be doing it again, in the future. But the reason why I mentioned that is because we're talking NFP tomorrow, and I do think non-farm payroll is really important. As a matter of fact, I'll just give you guys my opinion about non-farm payroll right now, because it's not going to change between today and tomorrow, 24 hours from now. And then I'll go into the charts here. Look, everybody's looking for over 1 million jobs created. In my opinion, the better the news, the worse it is for risk. So it's pretty simple. All right. And the reason why this is so important is because if the data comes in, and let's just go over here to ForexAnalytix really quick. Okay. And let's pull it back to tomorrow. So if you look at where we're at, here we go. Non-farm payrolls, the market's looking for basically 1 million jobs, right? And I would be also keeping an eye on, obviously you want to make sure that, this inflationary data isn't going up. It doesn't look too hot. Average hourly earnings, you don't want those creeping higher either. And the unemployment rate, look, it's supposed to dip to 5.9, 5.8%. If it dips anywhere below that, those are screaming hot numbers. And when you see numbers that are like that, it's not going to take a lot to get the taper conversation going. So what will happen, in my opinion, on a really hot number, you're going to see the dollar, probably sell off as risk goes up, and then you have to turn around and buy it, because I believe risk is going to come down. Strong number, you buy the dollar, that type of situation. We would see this. Let's go over to the S&P. I'm giving you guys, remember, an early look to non-farm payroll tomorrow and how I'm going to view it. So a strong number, you're going to see, probably the S&P spike up and then, come down after that, right? That's how I see it. So that means strong number, you have to look, if there's a dip in the dollar, you want to buy it. And if there's not a dip in the dollar, you want to buy it, right? And if it's a weak if it's weak data, you're going to see the S&P. And when I say weak, let's as long as it's not too weak, as long as it's like not, like we only create 500,000 jobs. We create 500,000 jobs. I think you got to, short risk, and I don't even know what you do with the dollar at that point. Maybe you sell dollar yen, right? But S&P 500, you see a weak number. Like, let's say we only create 800,000 jobs or 750,000 jobs. Unemployment rate stays at, or only drops to 5.9%. That number is good, but it's not really that good. So people are going to assume that the Fed chairman is going to stay dovish, stocks go higher, dollar is weaker, right? And you're going to see that's going to be what pulls the euro, past 122, in my opinion. So, and that's kind of where I think we're at. I actually think that the numbers are not going to be, they're going to be strong, but not like super strong. I think, they're going to come in around 900,000 jobs. So it's not going to be this blowout number that everybody's expecting. And that's going to mean a lot more of the status quo. Dollar is going to weaken and stocks will continue higher. Now, Dale, you were talking about the euro earlier. So everybody knows that I'm long the euro for the last,
Few days.
2 days. Actually, I bought the euro at 120.13 and I've been sitting in it. The reason why, when I say everybody that's in the ForexAnalytix communities in the chat rooms, if you're listening to the daily roundup and the morning edge, that type of thing. This is previous resistance, current support, right? All comes in at 119.90. So this between 119.90 and 119.50 has been major support as far as I'm concerned. Spike low, spike high, lows, right? So this is all support zone, big. If you didn't see it, this is a 38% retracement. Whoops, not that. This is not that. Damn it, keep grabbing the wrong thing. Here we go. Right here, you can see that was a 38% retracement that came in right around 119.85, right? So we had a wedge. It's a bearish wedge, which is a bullish reversal pattern. We rallied out of it overnight. As you can see here, we're getting close to the 120.85. I think this is going to be kind of pivotal today, intraday. But you know what's going to carry the euro, whoops. You know what's going to carry the euro dollar higher from here, Dale?
The S&Ps, risk on.
Maybe risk on, maybe the S&Ps. How about the cable?
Yeah, cable.
I mean, we look at how tight this triangle consolidation is. It's symmetrical, it's tight. And you know what happened following the Bank of England? We had this false breakdown below, 138.70. Triggered a whoops. Here, let me grab this.
Yeah, sure looks like it's on the verge.
Yeah, it triggered a bunch of stops below these lows. So anybody overnight that was long, they got stopped out if they had their stops below the 138.75. So when you stop out traders on the long side and then you pop right back up again, now the risk is that we continue higher. I know we're just consolidating right here, but if we break above 139, let's just call it 139.40, you break above that resistance, and next thing you know, you got a triangle breakout. And then if the cable starts rallying, guess what it's going to do with the euro? It's just going to drag it higher by hook or by crook. It's going to,
especially on a day like this where euro's already leading and outperforming.
Yeah, exactly. And then on top of that, you have a situation where you've got people that are positioning ahead of non-farm payroll, and they're like, well, shoot, do I really want to be along the dollar? That look at how strong the euro is. Going into the data. We're trading at, I'm just throwing out a number. Let's say we're trading close to 121. I don't know if I really want to be along the dollar. Going into this news. Maybe the economy is just artificially, and then people start talking themselves out of being long the dollar, and then so it can just build on itself. Then you know what else could happen?
Everything.
No,
Gold will break up.
Man. Gold, dude. Gold's been okay. So
it's inevitable, guys.
Hey, just shut your mouth. You go back on your island in Greece and the Cyclades. Go sunbathing or something. I'm joking, Stelios. Good morning. How are you?
Morning. I'm good.
So yeah, maybe he talks about the inevitable, but look, here's gold. We have a double bottom. Here's your neckline. Is at 1760. And you guys have heard me say this about 1,000 times. If you guys are ForexAnalytix subscribers, you hear my analysis every morning. When we go do this, we go, after we're done here at the face webinar, we all meet up, we go through the bias chart, we talk about, everything here. And you can see gold, you can see 1760, it's got an asterisk, 1800 is resistance. See how it says bullish? Well, every day you hear me say, well, as long as we're above 1760, there's no reason to be bearish. We have a double bottom. It completes. It moves up to 1840. That's minimum. But remember, if you have a, if you let's say the euro trades above 121 and gold and the cable starts trading above 139.50, gold's probably going to take out this 1800, complete this pennant, and then next thing you know, we're trading at 1820, 50% retracement. And plus you're going to have everybody going, oh crap, look, we just consolidated for literally 2 weeks, and now we're breaking higher. I mean, that's just something it's going to feed into dollar weakness as well. So just, some food for thought. I know a lot of people right now are, they don't necessarily think the dollar is going to weaken because, they look at the dollar and, they're like, well, the euros, had a really nice rally, or we failed. But look, this is a pretty shallow retracement in all actuality. You had really, what is that? 2 weeks of, the euro just plowing up 400 pips. I mean, we barely pulled back, a third of that. And now we're just, looking like we want to resume that trend. So I don't know. I'd be real careful with, I'd be really careful with the dollar here. So anyway,
Be careful with everything.
Always careful. We're always careful. So Stelios, good morning, man. How are you?
Good morning. All good. The kids are going back to school on Monday, so I'm very, very happy.
What's that?
The kids are going back to school, physical school on Monday.
That's got to make you feel
baby.
really good.
Yeah, all good, all good.
I know
good news.
Stelios and I are about the same age. He's a little older than me, but he's got 2 young ladies, and my kids are teenagers. They're pretty self-sufficient, and they're good boys. But having little ones that, I would be pulling my hair out. I'd probably look just like you, Stelios. So anyway, how do you feel about the environment right now? I mean, with what you're seeing with the dollar, what you're seeing, and let's not ignore like some of these commodity currencies are just really strong. Look at how the Aussie just shook off that China news overnight. The Aussie slumped back to 77 cents, and we bounced back pretty aggressively.
What China news, Blake? The rocket?
No, they're let me go.
They have they have a rocket flying around that no one knows where it will land.
The news was China state planner says to suspend indefinitely all activities under the China-Australia Strategic Economic Dialogue Mechanism. Basically, China and Australia have been working hand in hand for several years. And remember, the tensions haven't gone away.
They're fighting now.
They've actually the tensions between Australia and China over the last several I want to say 6-8 months really have really started to heat up, and so it's interesting. That may be the reason why the Australian dollar has had such a struggle over the last several months of building onto its recent gains from these lows. But with the inflationary environment that we're seeing, and you see commodity currencies or commodities like copper continue to rally, and lumber, and soybeans, and everything else that's just ripping higher. Eventually, even all this bad news, I don't know if it's gonna be able to contain the Aussie. So I mean, bad news overnight, the Aussie bounces right back to these levels. I'm actually surprised. I got up this morning, I was like, whoa, I thought we would be trading actually down here around the 76.50 level when I got up this morning, but no, it wasn't. So anyways, so still, again, now I know you're bullish on silver and gold. And matter of fact, if you guys haven't read his article, it is right here. Is this it?
Yep.
Here we go. So, and on the Trader Summit site here, I'm going to go ahead and put it over to you guys in our chat box. If you guys have not read that, make sure you read that article. It's so Stelios, don't give it all away, but what do you say there regarding these precious metals? Because you got gold that is right up against resistance. Why are you so bullish gold here when it seems like gold is the anti-cryptocurrency right now?
It's not that I'm picking these levels here, but it's just the whole momentum, I think, is now starting. We're seeing other commodities which have been just flying, and gold and silver have been underperforming. And yes, crypto has been a target for people who want to take a view on, on something other than metals. But look at how much the market cap of Bitcoin and Ethereum is. I think it's more than gold's value in terms of how much gold there is on this planet. So cryptos are already big enough. They have taken a big chunk out of metals, I think, or funds that would have gone into that. But overall, just my view that with all this easing, relentless easing, and you've got central banks who are thinking about tapering. Norges Bank today said that they are on track to be hiking later this year, and this is in line with what they said before. And the Bank of England, the hawk Andy Haldane voted to reduce the total QE, albeit by just 25 billion. But you're seeing central banks trying to show that they really want to taper, they really want to reduce their monetary easing. But at the moment, the way things are, they're not gonna budge. So with all this money flooding the market and all this loose conditions, everything is going to go up. I mean, it's only mathematics and economics 101. Obviously, you can't time it. It's very difficult to time it. But I think it's good levels to be accumulating, and that's what I'm personally doing.
Well, like any dinosaur would, you just go ahead and collect your little your silver chips and gold chips, and I'm just going to buy some digital crap. How about that? I'm just kidding, but that is the argument between. This is one of those big dynamics. I think is going to be. It depends how well adopted some of these cryptocurrencies are. Over the next 10 years, how the next generation is really going to view.
I personally get it. I get it. The younger generation, they're all over the cryptos because it's so easy. They're online, they're digital, they're unregulated completely. So they go in and do whatever they want. It's the far west, when they used to go gold hunting, and it's easy. I get it, but simply because it is unregulated, all sorts of stuff can happen. I mean, I'm afraid, I'm scared of it. Basically, that's why I'm not involved in crypto at all. And obviously, it's a huge move that I've missed, and I am okay with that.
I can't wait for Saturday Night Live skit this weekend. That's going to be exciting with Elon Musk. Now, really quick, guys, I want to mention something. Stelios, thank you for your comments there. If you guys haven't seen what we've done with the Traders Summit site, this is we call it a soft launch. It basically it's live. We haven't talked a lot about it. We're not actively
give it some Viagra.
We haven't. We're not. We're just. You're seeing. You're seeing new articles kind of jump on here, and one of the things that I want to let you guys know is you guys are going to start seeing a lot of contributors moving forward. Between myself and the other people behind the scenes like Stelios and myself that are working on this, and a couple other groups of people. I'm talking to a lot of folks that you're not even familiar with.
Yeah, check out Jim Welch, Macro Tides, guys.
Yeah, he's actually, I'm gonna.
He's been a guest on Face a few times.
He's one of Dale's friends. He's been a guest on Face. He's awesome. But you're gonna start seeing audio, video clips of people, really quick updates from people that pop on. Sometimes I'll be interviewing them. Sometimes they'll be on their own. I have an interview with Mark Faber on June 8th, I think. You guys know who Mark Faber is from the Boom, Gloom, and Doom report. Mark's going to be on. But there are a lot of contributors that have been with us over the years that will be contributing to the Traders Summit site and portal. And just be on the lookout. It's going to be a, you know, really nice single location for
Blake. We have jobless claims in about 5 seconds.
Thank you. All right.
We have them.
Let's pull up
Let's see.
data flash here.
Expected 540 came in better than expected. Revision
A little bit
slightly
better
worse
than expected. Yeah.
Productivity better than expected. Yep.
Just pull up the dollar here. Thank you very much. I'm going to pull up the euro. Euro is already pulling back just a little bit ahead of that data, but really not much of a reaction here. The dollar is pretty quiet. I think, you know, obviously tomorrow's data is going to be what everybody's looking at. So Dale, I'm going to let you take over. Hey guys, if you're watching us on YouTube, make sure you give us a thumbs up. Comment in the comment sections. Always helps us there on the YouTube channel. Appreciate you guys always listening in and supporting what we do here at ForexAnalytix. And so, Dale, it's all yours.
Okay, thank you very much, Blake.
Thank you.
Good luck the rest of the day, everyone. I'd like to introduce Raghee Horner. Raghee, how are you? Welcome back to Pace.
Good morning. I'm doing well, thanks.
Yeah, it's been too long, Raghee. It's really nice. Yeah, great to see you. How's things going in Florida?
I don't know. Can you see me? Should I turn video on? I don't know that anybody needs to see me.
How about sharing your screen?
Oh, okay. No, I meant my, let's see. Zoom is always an adventure.
Okay.
So I'm doing really well. Great to be here. Great to be here.
Okay, so I wanted to, I interviewed you for several years going back to FX Street, but you know what? Yeah, the question I normally ask people, and I really can't remember your story. And before we get to the markets, maybe you could share with us your journey and how you got in the industry, and if you're glad that it happened.
Oh, that's awesome. So I actually started trading covered calls on shares of IBM that I had got from my father. And that was 15 and a half, 16. So that's where everything sort of began. And then, the Forex parts where for me, it gets really interesting.
Okay.
Because, bear with me. Because at that point, I started developing a whole lot more as a teacher, until then I was teaching a little bit, but not a lot. And I see you got the dollar up right now. Oh, I would love to talk about the dollar in a little bit, but yeah,
Sure.
So I started about 15 and a half, 16 years old, writing covered calls on shares of IBM that I had, got curious about the markets. And, by the time I get to college, we're all doing different things for extra money or even to pay for college.
Right.
I've got buddies that are valeting cars or working,
Right.
Summer jobs, and I'm trading from my dorm room and I'm skipping class. And my first semester of college, my GPA was not even a whole number. There was a decimal before there was a number.
Okay.
I was literally flunking out of college because I'm sitting here thinking I'm making more than most of my professors. My mom, my Indian mother, did not like that, did not care that I was making really good coin in college.
Did you say, honey, get a real, did you say, my mom said this, honey, get a real job.
I think probably 10 or 15 years into, this might have been after my
Oh, you lived through that too?
Oh my gosh, I think after my first 10 or 15 years, my first book was published, and she's still sort of hoping that I'm going to go to law school. And I'm like, no,
Still.
Mom,
Still.
because it's a secure job. It's a secure job.
And you know what? Your mom and my mom wanted us to do the same thing. She
and I
wanted
can
me to be an
appreciate
attorney.
that.
Yeah.
I can appreciate that. So
anyway, we argue cases now. Only we build our cases with markets, with different contingencies that build the case as an attorney would, with confluence and whatever you're using. I really think you have to have kind of like a background where you know how to build a case in the market to be compelled to take risk.
I think probably the few classes in college, which I did ultimately finish, I ended up double majoring in English and psychology, which was a real screw up because I had to get both the BA and the BS. But I realized that history, sociology, served me far better than any kind of economic financial understanding of the market. And debate class was really good because one of my professors, he did a little trick on us. We were preparing for this debate, whatever the 1 week, 2 weeks preparation was. And when it was time, he said, great, now you're going to switch. And so if you were for, you were against, and vice versa. And so I realized, gosh, I wasn't prepared to make the other side of the argument. And when I started to think like the other side, my original argument got that much better. And I think that really works for traders, right? We've got to, for a moment, before we hit that buy button, wonder what it is the person on the other side of the trade is seeing that we may not be seeing. So
great point.
I agree with you, my friend.
Yeah, great point. Sometimes I look at the market, even when you have a position, and pretend you're flat, because once you're in, you kind of have, of course, you have a bias because you're assuming risk. But ask yourself if would you be long this market here or short if you were flat, and that also gives you an answer. And there's all kinds of little tricks, like I've always had a hard time writing things to objectives, and someone gave me a tip and they said, Dale, well, when you look at the market and you're ready to ring the register prematurely, and I've overcome it with partials, but he said, do this. He said, before you're ready to take profits, ask yourself if you would reverse there, and if the answer is no, walk away.
That's a great
good one.
That's great. I think I share something similar. My idea is any profit target should be an obstacle, meaning there's that potential for sure. And so, for example, and I love that. That's a great way. It's darn near poetic. If I think a level could be where the market's going to stop and reverse, I want to be proactive about it, pay myself while I can, not when I have to. And and I never put initial profit targets at brand new highs. That's somehow telling the market it has to do something special for a little old me, for my position. And that's wonderful. That's a great way to put it. Okay,
well, you wanted to talk about the dollars, so why don't we get to it? What time frame would you like me to put up here?
Sure. The daily's fine.
Daily?
Most of my currency, most of my trading, it's interesting, over the years, I used to look at multiple time frames. And now if I'm looking at one long term, a daily or a weekly, and one short term, maybe a 1 minute, 5 minute, or 15 minute, I'll pick one of each. And that's pretty much where I live. So I'm really, really short term, or I'll swing trade a longer term time frame, meaning I'll find a trend. And the dollar to me is, and I heard you guys talking about the dollar earlier before I came on, and you and Blake were talking about gold and silver and such. And to me, as a currency trader, to me, everything starts with central banks. The great Stan Druckenmiller said, look, all you macro folks out there, and I consider myself a macroeconomic fan, devotee, I'll make that part of my analysis. So look, the only thing you need to keep an eye on is what the central banks are doing. And he's right. You can look at the stock market in the US and say the same thing. But when we macroeconomically started to spill into reflation, and that would have been easily Q3 of last year, and that even was probably a little late. But when we spilled into reflation, it's hard to not be a bear on the dollar. And yet, if you look at the dollar basket, the index, which I usually am not a fan of. So let's jump on over. Dale, would you mind if we go to say look at the dollar Canada? So this is where Forex traders and currency traders, because I don't want to leave my futures currency folks out, but let's face it, Forex trading, that's the heart of currency trading. And what we know is, frankly, I don't give a rip where the US dollar is at, because it's diluted with, the euro being 58%, and then a fairy dusting of everything else. If I want a pure look at the dollar from a macroeconomic reflationary standpoint, what is the greenback doing against calm dolls? And this is where, since Q3, Q4, I've just continued to press my advantage, mostly in the loonie. Once crude oil and lumber started going ballistic, we have parabolic moves in lumber. My best proxy for that as a currency trader is just just go take a look at what's going on with the loonie. Short the yen against it because the equity markets are up, and buy the the Canadian dollar against the US dollar. And that's been probably my best position, because again, macroeconomically, where else am I going to go? That makes the most sense right now.
Okay, that's pretty interesting. We had a little bit of a sell-off in crude yesterday, and we haven't quite taken out the high of the move that we posted here. And Canada, to me, I'm getting a lot of non-confirmations on different time frames. Do you think we're due for some type of reaction, maybe back to the major breakdown here, up towards 23, 24? Are we just going to keep melting under 120?
So if I'm going to look at what the dollar is going to do, and I heard you guys talking about the euro, I'm long euro US. I just
Okay.
did that last week. The Canadian dollar position is about 6 months old.
Okay.
So, if and when we revert, so I guess it depends on what the mean is, right? I think all of us can talk about mean reversions, but I guess it depends on what someone's mean actually is. Everyone's got a different, some people believe it's the 21, some people might look at a Fibonacci level. I'll look at the 34 EMA. So I'll look at the 34 EMA, and if, let's say we break the downtrend, which, let me pull this up on my screen here while I'm talking to you.
You could share it so we could see your chart.
Oh yeah, sure. Let me do that here.
Okay, so let me stop sharing.
Okay, yeah.
And then you could go ahead and take it. So
Terrific.
Okay.
Go ahead and grab it.
Yeah.
All right. Nope, you're still sharing, my friend. We don't have to. It's okay. I don't want to.
All right. I want to see your work. So
sure.
I'm just don't know how to do it. Okay. I'm not sure how to stop sharing.
That's okay. That's okay.
All
we'll
right.
just keep the combo going. That's all right.
All right. All right.
So,
all right.
So imagine, gang, if you want. Actually, since we're all on trading.
Oh, here it is. Stop
you
sharing.
got it?
Oh, got
sweet.
it.
Okay.
Think I'd know after a couple of years.
Oh gosh, you and I have probably over the years, Dale, how many platforms have you or Blake or I have to learn and present on? This is probably what, our 8th or 9th different platform over the decades.
Yeah. I mean, we've been in all kinds of rooms, starting from
gosh, yeah. Anyway, we have to. You not only have to be traders, we have to be, technicians in a certain way with these technical.
Oh, they dragged me kicking and screaming into the 21st century. I'm still in the 1980s, and shed a tear for the trading pits all being closed. What a great era that was, huh?
I'm going to sound like a heretic and possibly a jerk, because I'll tell you what, when I started trading. To me, good riddance. Good riddance.
Why? We got to steal from the public.
Never been a fan. I tell you what, this has been a long time coming. Exactly.
Yeah.
I admire the history of what the pits were. I'm sure I make a lot of folks go, Rob, what are you talking about? It's the history of trading. Absolutely. But so was trading in a big field next to a big wall before it was Wall Street. When we're we're trying to get the red notes out, you want to go way back.
Yeah.
But it is a part of our history, but it really is history. And I'm surprised it took this long.
We had many black sheep. Yes,
go ahead. And I also am oddly, and this is a whole other conversation, I don't want to go into a whole other, but I'm oddly fascinated by the way in which the modern day trader is somehow still curious about what a floor trader would do. Because the truth of the matter is, and you could probably, and I've got buddies that'll admit the same, most of them couldn't make the leap to what your retail trader does.
Exactly. You know why? They made money off the paper. They didn't have to be directional. They didn't have to know where a market was going. All they did was, some were order fillers. Others just, they saw the paper and they just traded against the paper. So they didn't know how to.
It was a different kind of trading, to your point.
Yeah, you're right. Many could not reinvent themselves.
And I don't know that I would have been a great floor trader. So I'm not saying that I would have. I wouldn't have. I'm glad to be a back office trader. And when I have friends that have done both, it's tip my hat. But
I did both, Rocky, and I didn't like it. I dreamed of doing it because I came into the business as a runner. Making $80 a week, living at home, taking the L to the Merc, and a lot of guys I went to college with, they were all set up with IMM seats and everything because they came from money. And it took me about 13 years to get back to become a member and, garner the resources to do it. And it was so anticlimactic. You kind of have a dream, and it's driven by the ego that you don't want to be the low end of the caste system.
Sure.
Just a runner. Oh, what do you do on the floor? Oh, I run. But it was so anticlimactic, and I found myself going back upstairs to trade during the day.
Mhm.
And I also handed off my orders to a filling broker so I wouldn't have to worry about an out trade in the morning.
Mhm.
And then after a few months, I said, especially during the winter, I was living in Marina City and it was 20 below, and I'd call the airport and say, get me out of here anywhere warm. And I was stuck. And I left on New Year's Eve doing donuts in my Trans Am on Lakeshore Drive, trying to get back out west. So that was my floor trading experience. It
Oh
was
my
very
gosh.
anticlimactic. Yeah.
Oh
It's a
my
good
God.
story anyway.
Absolutely.
Yeah.
So there's
So
another good story happened here on this Canadian dollar, and
All right.
this is my layout. So this is TradingView, as many of you know.
Yeah.
The volume profile on the right side is really of no use to us on this chart, but when I jump on over to futures and trade the 6C, then it's a little bit more helpful. But what I've got here is a simple zigzag tool because I look for a couple different types of patterns, and it just makes it easier for me to see if I've got the zigzag on there. But what I've got are my grab candles, a 34 EMA wave, and some Darvis levels. And by the way, all of these we've submitted to TradingView, and they're free. So I'm not trying to sell anybody any indicators. If you just look up simpler, there are 3 unlocked tools: Darvis, grab candles, propulsion, and you can put those on there. So
you coded those,
when I'm on,
Froggy?
Mhm.
You coded those?
Did I code
And
these?
yeah,
No,
you
I
came
didn't
up
code
with
those.
these? Oh,
I
okay.
had someone I have other stuff that I've coded, but I didn't code those. No,
Okay.
I didn't know how to use Pine Editor back in 2015, 16. I know how to use Pine Editor now, and I can code in
Wow.
Pine Editor, but not then.
What a Renaissance woman.
Necessity. I didn't want to wait. I didn't want to wait on somebody. Necessity and impatience.
Okay, so that's interesting. You're not the first person I heard about this 34-day EMA. So why did you come up with 34? What was your reason for it?
Sure. So back in, gosh, this would take me back to maybe my last couple of years of college. So this would have been 92, 93, 1992, 1993. And by then, and also consider the context of when, this kind of goes back to the way that I started trading. When I was trading, there was no Amazon. There were no, tradersummit.com. There was no money show, expos, none of that stuff. We didn't even have Borders, and, it was Walden Books, or it was your local library. We didn't have these big mega stores either. So getting your hands on trading books meant looking at the classics. It meant reading Dow, Wyckoff, Schaubacher, and
Edwards and McGee.
Those kind of things. And frankly, I like Schaubacher better than Edwards and McGee and anyone who came after. I believe it was Edwards or McGee who was Schaubacher's nephew. So I'd go right to the source.
Yeah.
And that's where I started realizing there were things that these guys had already determined. You can even look at some of Dow theory. Dow theory was posthumously coined, but you look at some of Dow's early patterns and you can see shades of Fibonacci and even harmonics within them. So, I think when you go under the surface and realize the root of all this stuff, it's fantastic. Anyway, I started getting curious about Fibonacci numbers, and I started setting exponential moving averages. I started with simple because it was easy to calculate by hand back in those days. But I started setting my moving averages to Fibonacci numbers. And I started with as small as the 3. I went, 3, 8, 13, 21, 34, 55, 89, 144, all the way to 1597 before I settled on the 34. So that would have been in the early 90s. And then by the mid to late 90s, well, now we've got the internet, and now we've got streaming data. I don't have to use my DTN dish anymore.
It was big.
Yeah.
It was the biggest dish. You could have had dinner on it.
Oh my
The
gosh.
whole
Yeah.
family.
People were wondering what it was, because that was around the time that I got the DTN was around the time that DirecTV was just sort of coming
Right.
out. Getting they're like, what kind of TV is that? And I'm saying, it's not TV. It's how I get my overpriced data. And I think for a lot of folks, they don't realize, you and I were probably somewhere north of $1,600 a month just to get data. And now most of it's free. So
Yeah. I remember that. You'd pay exchange fees.
oh my gosh. And then the DTN fee and the equipment. So anyway, that 34 came from, just reading the classics, as far as I'm concerned, where everybody should start. And realizing, hey, let's throw some Fibonacci numbers on exponential moving averages. And I think that's a very popular thing. I mean, I certainly didn't start that, but I think a lot of traders said, look, 20, 50, 100, 200, they're great, but there's something magical about those Fibonacci numbers and exponential moving averages. And I just never looked back.
Okay. I know you were a fairly early adopter of Bitcoin. Did you have a tremendous year already, or a decade?
Oh gosh. So, I love when I'm talking to a group of, Forex traders, because I really believe if anybody understood crypto, it was currency traders. I used to call this digital Forex back in 2015, 2016, when it first came on the scene. I'm thinking, this is just another way of we've got currencies in the Forex world that we would never consider holding for great periods of time, because we know even certain currencies around the world, fiat currencies, have widely varying values week to week to week. So I think we're already used to some of these miners, or even sort of the miners, acting in a very
Altcoins.
way.
Yeah.
So when
It's kind of like rotation, you get rotation in equities in different sectors, and seems like everything came to life after Bitcoin put in a temporary top, that all that money flow from possible gains in Bitcoin just began to flow into some of these altcoins. Is that the way you saw it?
Actually, I have to give my nephew, I'm going to go way back, because my Bitcoin journey started before the election. So my Bitcoin journey started in 2016.
Right.
And for some folks who might remember, this is when Bitcoin started moving. The peso was moving too, and we were getting the debates between the then candidates. And right around that time as well, they were confiscating, and this is the dumb luck sometimes with which we are able to enter something we don't know. In 2016, they were actually confiscating rupee in India. And anyone from India probably remembers if they've got families back there. And
the high denominated notes. I kind of thought that when Modi did that it was a dress rehearsal for other democracies, or so-called democracies, to do the same thing, a war on cash, more control by the government. There's a war on cash now, and they even use COVID now. Who wants to touch paper that someone with COVID might have? So people are afraid of cash. They're definitely moving away from something that kind of gave you privacy.
Well, I think what was really interesting is, that's a really interesting way of looking at it. For me, I'll tell you what, it was much more simple for me. My nephew said, look, I'm buying Bitcoin. I said, are you really? I said, are your friends buying Bitcoin too? And this is going back to a trade that I made in the late 90s for the energy drinks. There was an energy drink.
Oh, yeah.
It started with an H. I think the name of the energy, it was before Red Bull. It was long before Red Bull, and I'm seeing all these kids with skinny little cans in their hands. I'm, what are you drinking? And I went and I realized it was a publicly traded stock, and I bought it, and it went ballistic. When I saw big lines at KKD, so there's this observational part of trading and investing, which is really interesting to me. And Bitcoin was just an extension of, wow, your friends are buying it too. Is this a big deal over there? And he says, yeah, with everybody I know, as they're confiscating, we're buying Bitcoin. I said, well, hell, I'm going to do it too. And my cost basis is between $400 and $500.
Nice.
So
what a great story. You decided not to buy pizza with your coins at that point in time, right?
There's a great
The
story
mo-
that the SPAC king Chamath Palihapitiya talks about, where he bought some property with however many thousand Bitcoins. And he says, I think that property is worth about $1 billion because he
Yeah.
did it back. So, who knows, right? My idea, though, when I bought it was, if this thing is mined, there's 21 million of them. It's like real estate. If you buy an area where it's still under development, you at least hold until the area is developed, and then you see ultimately what the value of the area was. So I'm thinking, let this thing continue to be mined. Let there be
Right.
fewer and fewer coins. And then I decided that I would just hold them till they were all mined, until I realized that I won't be alive when that happens. But the idea was there.
Right.
Let me see what this can potentially do.
How did you navigate the crash in 2018 from 18 to 3,000? Just hold on for dear life?
It's funny. This is what I love about TradingView. You can see my notes here. I wrote 58, 73, and 65, 64.50 in a separate account, because I didn't want to. The coins that I have that I bought in 2016 are in cold storage. So I just took those, especially in the wake of Mt. Gox, which was happening around that time early. I didn't want to be, subjected to the nightmare stories. So in a separate account, in my Gemini account, I've got trades going on, but in my Coinbase account, I started buying on the way down. So I bought again at 58, I bought at 64, and I think I bought at 4. So I just bought. Bought.
Nice. I have a question from a listener. Paul Landon would like to know a few names of the classics, the books that you mentioned earlier.
Oh, I'm happy to. So, you know what? I'm going to grab on my laptop so I can walk over to them. I would love to show you guys my bookshelf, but anyways, I'm going to walk over to my bookshelf here. So the classics would start with Technical Analysis and Stock Market Profits by Richard Schabacher. Okay. That is the first, the best. Everyone else has written that. And all due respect to everybody else, they've just rewritten that book. They've added extra stuff, but that was the first. I would also recommend, getting your hands on anything by Wyckoff, because I believe Wyckoff was a teenager when Charles Dow had his little newsletter, which would ultimately become the Wall Street Journal. So between Dow and Wyckoff, whichever one you resonate with, 6 of one, half dozen the other. I'm more of a Dow devotee. But either way, anything by them, and you can find a lot of that stuff online. Dow did not write books, but a lot of people wrote about Dow, and a simple Google search will keep you busy for hours reading interpretations of Dow theory. But what you need to take away from Dow theory, if you're interested, is the 4 phases or stages of the market. And also Dow is a big fan of volume, which, is a very
volume precedes price, all of that. Yeah. How do you spell the Richard's last name, the reader?
Schabacker.
You know what? Time just went too fast, Rocky.
No worries.
You know what? I'm going to get you into the regular rotation, so a year doesn't pass, because I forget after we do an interview, and then I see you on Twitter, and I go, "Gosh, I haven't talked to Rocky in such a long time. I'm going to get around." And you always say, like Val Kilmer, "I'm your Huckleberry." From Wide Earp, and it's so much fun talking to you and insightful. And do you have any kind of business model where you're interested in people contacting you and possibly talking to you about what you do and how to keep in touch with your elite analysis, because you are one of the best?
Oh, I appreciate that. Like everybody else, I'm on Twitter. You can find me on YouTube. It's all Rocky Horner. And then I've got a free newsletter over at countdowntrader.com. Okay. And that's probably a great place. It's a free newsletter. And if there's anything that I am doing, it'll be through that Countdown Trader. But just take advantage of some of the free resources. I mean, believe me, in this day of modern marketing, if there's something that I'm going to do, it'll be out there at some point. But take advantage of all the free resources, and there are plenty of them. And then I also do a 20-minute pre-market show from 9 to 9:20 on YouTube called Charts and Coffee, which is just about to start. And that's about it, my friend. But I would definitely love to again. It's always great to hear your voice.
Okay, so my trading warrior sister, thank you so much. It was great laughing with you, and thank you for sharing your views. And stay safe. Are you inoculated, or are you an anti-vaxxer?
I'm a trader, which means
Okay.
we were well prepared for
Okay.
isolation long before COVID. So
All right. All right. Okay. So again, I'm going to get a hold of you later on today, and we're going to book another date. And it was really a fun interview and a great interview, Raghi.
thanks.
Thanks for hanging out with us for a half an hour today.
I appreciate it. Thanks for letting me speak to the community. Everyone be good to each
Okay.
other.
And everyone's saying great interview. They're thanking you, and you could find her on Twitter at Raghi Horner, and go to her website. You're not going to regret having input from this pro. Okay, that's a wrap, everyone. See everyone tomorrow for the NFP. You could join the team for Morning Edge in 15 minutes. Adios. And
Take care.
remember, don't just, thank you, Raghi. And this was one. Don't just count your pips, count your blessings. Talking to Raghi today was definitely one for me today. Hope it was for you too. And we'll see everyone tomorrow. Adios.